Meantime, AMD, as we said earlier, topping estimates driven by data center revenue up 57 year on year, also providing a pretty strong forecast for the current quarter revenue, expecting $1.5 billion, though, in lost revenue through the end of the fiscal year as the U.S. limits the export of the company's AI chips. Joining us this morning in a CNBC exclusive is AMD CEO Lisa Su. Lisa, we were just talking about when's the last time you joined us when Cramer wasn't here. Our apologies, but it's great to have you.
It's wonderful to be here with you. Good morning, guys.
We mentioned this number that you put on the restriction effect. How do you get to the number, and how do you think that, what's the trajectory of that figure as we go forward?
Well, Carl, let me start with first, we reported a great first quarter. I think we saw strength in across all of our businesses. We saw strength in our client and gaming segments. We saw strength overall in our data center segment. And I think that just goes to the foundation of our business, which is really on high performance computing. Now, to your question, as it relates to some of the China export controls that came out earlier in April, I would say that it is a headwind in our business. We said it was a $700 million reduction in revenue for the second quarter and $1.5 billion for the full year. But even within that backdrop, what we see is an environment which is very, very favorable to our product cycles and all of the great technology that we have coming out in 2025. So we still see the opportunity to grow strong double digits in 2025. And that is really on the strength of the overall portfolio that we have.
Yeah, a lot of the bullish notes today take note of new chips, right, that will be debuting relatively soon, going to impact favorably the second half. And then this notion, Lisa, I'm not sure how comfortable you are addressing it, of Intel as a shared donor.
Well, let me take both aspects of it. First, let's start with what we're doing. We are really about having very strong product roadmaps out there. We've always said that for all of the years that we've been talking. It's about having a great product portfolio that really plays to what customers need right now. So we see excitement in our data center portfolio. Today, our EPYC processors, our server CPUs are, all over, every major cloud provider is using our server CPUs. We have tremendous opportunities and growth in the enterprise market where you see many of the Forbes 2000 companies also selecting AMD. And I think that's because, we've shown them year over year that we continue to give them significant total cost of ownership to make it more efficient for them to get their job done. We're also very excited about the AI opportunity. I think, AI, I heard you guys talking about it as I was coming on. I absolutely believe we're still in the very early innings of AI when we think about the opportunity. And yes, there are some, puts and takes and bumps in the road, but overall, we're still at the place where, enterprises are just beginning to feel what AI can do for them. And then also the PC market is a market that has done extremely well for us and is a place where, again, people are upgrading their PCs. They want to upgrade to the best technology that has, great performance as well as great efficiency. And, that's what we have in our roadmap.
Lisa, you can't get away from the questions about tariffs, I'm afraid. I know on the call there were quite a few, and I'm going to go there as well because it is a key part here. I mean, do you have any expectations as to whether there will be sectoral tariffs or what they might be? And I also would be interested to know whether you expect there was some pull forward in terms of demand as a result of fear of potential tariffs.
Sure, David. So, look, I think we're all watching the regulatory environment, very, very carefully. As it relates to sectoral tariffs, we're in active conversations with the administration as they're thinking about both the short-term as well as the long-term policy. The long-term policy arc is we want more U.S. manufacturing. We want more manufacturing here in the United States, and we are actively moving a bunch of our manufacturing here, but we realize it's going to take some time, and I think that's the balance that has to come in play with sectoral tariffs, and we'll have to see how that comes forward. Now, to your question about the strength in our business relative to tariff pull forwards, I believe that, again, every customer and every industry is looking at this slightly differently. From our standpoint, our strength is actually very much focused on the strength of our product portfolio. I think the relative tariff impact was small, whereas the relative opportunity for us has been just end user demand for our products. But we're going to continue to watch this very carefully. And the beauty of the business, David, is I think we've learned to become very agile through all of the things that have happened in the semiconductor supply chain, and we're going to continue to watch all of these trends very carefully and make sure that we react appropriately going forward.
Yeah, you mentioned being agile as well on the call and said you have a good overall inventory position. I guess my follow-up would be, what does it mean to be very agile? What does that actually mean?
It means we have a great balance sheet. It means that we have great customer relationships. I think we plan for success, so we make sure that we are planning for a market that is robust to our products, but we will certainly adjust as needed if we see the macro weakening. Now, I have to say, for customer ordering patterns today, we're already, let's call it a month into the second quarter. The month of April was actually quite robust, so it gives us confidence that people aren't making very short-term decisions right now. I think they're all wanting to ensure that we watch the environment, but recognize that we've been through many of these types of situations before, and we're able to adjust the supply chains and our inventory levels as needed as we see how the macro does over the next couple of quarters.